Hello and welcome to the second lesson of our 11 video stock analysis course. In the first one, we identified your official research home base, the Investors Relation page. Now, it's time to open the most vital document found in that archive, the annual report. The annual report, or 10K, is the single most important document a company publishes. It's hundreds of pages long and most people never read it. But here is the truth. You don't need to read every page. You need to know which pages matter and what to look for. By the end of this video, you will know exactly how to do this. 10K is a mandatory annual report that every publicly traded US company must file with the Securities and Exchange Commission within 60 to 90 days after the end of its fiscal year. It's the company's official, legally binding annual report. All publicly traded companies worldwide publish annual reports, but only those listed in the US call it 10K. Non-US companies might have different ways to call it. While the format differs slightly, it provides largely the same core information. Because it's a legal document, the company cannot lie in it. Everything in here is subject to audits, regulations, and legal liability. That makes it one of the most reliable sources of information you'll ever find. So, let's go to the table of contents. A 10K is divided into parts and items. Don't let this intimidate you. Here is a map of what's inside. The business section helps you understand what the company actually does, how it makes money, and who it competes against. This is where you build your understanding of the business model itself. The risk factors section is where management is legally required to explain what could go wrong. A lot of investors skip this section, but it often reveals vulnerabilities that aren't obvious from the headlines or the financials. Then you have the MD&A, Management Discussion and Analysis, which is one of the most valuable sections in the entire filing. This is where management explains the story behind the numbers, what improved, what got worse, and why. And of course, the financial statements section is where the raw financial data lives. The income statement, balance sheet, and cash flow statements. We'll spend several videos breaking these down individually, because this is where real financial analysis happens. The remaining sections, things like properties, legal proceedings, and corporate governance, are still useful, but usually more contextual. You don't always need to study them in depth immediately, but they can become very important depending on the company or situation. Let's go to the business section. This is where the company describes itself. Read it as if you're a complete outsider who knows nothing about the business. Ask yourself as you read, what does exactly this company sell or provide? Who buys it? Consumer, businesses, or governments? How does the company make money? One-time purchases, subscriptions, or advertising? What are the different segments or divisions of the business? Who are the named competitors? Pay attention to the revenue breakdown by segment. Many large companies have multiple business lines. For example, a tech company might get 60% of its revenue from software and 40% from hardware. Knowing where the money comes from helps you understand where to focus on your analysis. Also, look for mentions of competitive advantages. Things like patents, exclusive contracts, brand recognition, or switching costs. These are what make a business durable. Let's now go back to the risk factors. This is one of the most honest sections in the entire document, and most people skip it completely. Don't. Companies are required to disclose every significant risk that could negatively impact their business. Yes, they word things carefully, and yes, some risks are boilerplate language you will see in every filing. But hidden within this section are genuine company-specific concerns that management is legally obligated to flag. What to look for? New risks that weren't in the last year's filing. These are a signal that something changed. Risks listed early. Companies tend to put the risks they consider most significant first. Anything mentioning key customers or suppliers. If one customer is 30% of the revenue, losing them is catastrophic. Regulatory risks. Is there pending legislation that could hurt the business? Debt or liquidity risks. Is the company warning it might have trouble paying its obligations? A pro tip is to compare this year's risk factors to the last year's. Open both filings side by side. New additions or significantly expanded language are worth investigating. We can continue with the management discussions and analysis. They are here under item 7. If I could read only one section of the 10K, it would be this one. The management discussions and analysis is management telling you in their own words what happened this year and why. Think of it as the narrative behind the numbers. Before you look at any spreadsheet, read the management discussion and analysis. It gives you a context for everything you're about to analyze. Here's what you will find. Results of operations. This section compares the revenue, costs and profits between the current and the last year and explains the reason for each change. Look for explanations, like revenue increased 12% due to strong demand in our cloud segment, or margins declined due to higher raw material costs. These explanations tell you whether a trend is structural or temporary. Liquidity and capital resources. This section explains whether the company has enough cash to run its operations, pay its debts, and invest in growth. Watch for language like "we may need to raise additional capital." This is a warning sign. Healthy companies talk about cash generation here, not cash concerns. Forward-looking statements. Management will often discuss what they expect in the coming year, revenue guidance, planned capital expenditures, strategic priorities. This is valuable because it tells you what management themselves believe the future looks like. One important caution: the MD&A is written by management. They are naturally going to present things in the most favorable light possible. Your job is to read critically. Verify their claims against the actual numbers in the financial statements. And last but not least, let's proceed with the financial statements. This is where the raw numbers live. There are 3 core financial statements, and we'll cover each one in a complete detail in its own dedicated video. For now, let's just get familiar with what's here. We have the income statements, which contains the revenue, expenses, and profit over the year. We have the balance sheet, what the company owns and owes at a single point in time. We also have the cash flow statement, the actual cash moving in and out of the business. These 3 statements together give you the complete financial picture. No single one tells the whole story, you need all 3. You will also see notes to financial statements. These are footnotes that explain in detail how the company calculates its numbers, what accounting methods they use, and specifics about their debt, leases, and other obligations. The notes are dense but incredibly revealing. Get in the habit of checking them. Okay, so here's your action step after the video. Find the 10K for one company you're interested in. Go to their investors relation page. Download the most recent annual report and read just the 2 sections: business and management discussions and analysis. That's it. Don't try to read everything at once. If this breakdown helped make the annual report feel less intimidating, please hit the like button and subscribe for the channel so you don't miss lesson 3, where we will learn how to track these trends throughout the year using quarterly reports. We are building a community of disciplined investors, so drop a comment below and tell me which company's 10K you're opening first. I'll be there to answer your questions as you start your research. I'll see you in the next video.